All right, price turning points. What are price turning points? What are price turning points? That's all right, Phoenix. You'll get there. You're obviously only new to this, and a couple of us here, I think, have only got some minor exposure, but at least you're learning it right from the beginning, and you can take these things into consideration as well when you're going through videos and when you're going through other things. So don't be concerned or stress out too much about it. Absorb what you can and just practice. What are price turning points?
Daily levels or swing highs and lows.
Yep.
Yeah, where price runs out of puff, basically, where if it's a bullish market, the buyers are coming to an end and the sellers are starting to take over.
Yep. Let's have a look. Price
Where
turning
do you
points.
find tweezer tops?
Where you find tweezer tops, where you find pin bars, yeah, and golfing bars, yeah,
Yeah.
yep. Price turning points refer to areas on the chart where the market stops moving in one direction and starts moving in the opposite direction. These are often major swing highs or lows, and they signal a shift in momentum or sentiment from buyers to sellers or vice versa. Do we understand that, guys? Price turning point. Bang, turning point. Bang, turning point. Bang, turning point. So they're major areas where we see those swing highs and swing lows. The key characteristics, they often occur at strong support and resistance levels. We know that already because we've gone through the levels of support and resistance. Commonly found at supply and demand zones. Major areas where the interest of supply and demand is. Can be identified by reversal candlestick patterns, which we know, pin bars, engulfing bars, tweezer tops, tweezer bottoms. They may align with Fibonacci retracement levels or trend line bounces. Once again, back to the euro yen. Trend line bounces could be, something that could have occurred. But we see it when we draw trend lines. We see it. Typically show exhaustion. What you were saying there, Glenn. Runs out of puff, runs out of steam. Long wicks, shrinking candles. Those characteristics, what you see there at those areas, they'll give you an indication. Price could be turning. Followed by a change in market structure. Break of high low or lower high if it drops in the opposite direction. So you'll see it completely break through. Example. Price comes up, bang, turns around, and then boom, breaks that low level there for continuing. But what happens at this area is what we're concerned about. This is an indication, obviously, right? It's dropped lower than that previous low there. But what's happening up at the top here, that's important. That's where we're looking for these pin bars, these engulfing bars, those reversal candlestick patterns. Trend lines, could be a trend line in through here. Those decent areas that we've got. You can see how it crosses, comes up, crosses there, level of resistance, trend line, and we can see that price comes up, stalls, trend line stalls at the resistance level, bang, drops.
When you say divergence, Andrew, in that second last point, is that moving average divergence or?
Yeah. So when you start to see divergence coming in from those moving averages.
Yeah.
Because you're going to see price shoot through those moving averages. They start to cross over. When they cross over, that's an indication. We should know that obviously with our previous learnings, but the moving averages, when they're crisscrossing one another, we've run out of steam, we've run out of momentum. If we run out of steam and run out of momentum, I mean, one of two things is going to happen. Either it's going to turn or it could continue, but we just need to see where it is. And if price starts to drop through those moving averages, then we've broken through them, then we're going to start to see some divergence come out through there as well. Volume spikes or imbalances will often appear at turning points, signaling aggressive buying or selling. So volume spikes, imbalances, long wicks, big candles shooting up in one direction, then dropping back down in the other direction. A lot of different wicks, sized wicks, up and down, up and down, up and down. You start to see a lot of big movements, inconsistent movements. Break of trend line or structure after turning point helps confirm a true reversal. So if we've got a trend line and price drops from a level of resistance and turns around, breaking through that trend line, you would have seen me do that on live sessions plenty of times where I've got the two trend lines there. Once it breaks through it nicely, gives us an indication that maybe there could be a reversal. Let's have a look.
Aussie US is a good one, Andrew, to see all the reversals
Aussie US, yeah. Okay,
on the 4-hour.
Yep. Okay, yep. So you're talking about this section over here. So you can see. I mean, look, there wasn't. Let's just zoom out a little bit on the 4-hour. Yeah, I mean, really, we're talking about this part here, right? You can see the indecisiveness in the wicks. You can see big candles, green and red, both. Obviously, we're not going to look at pin bars, engulfing bars and all that stuff. We know all that. We just want to look at characteristics here. We can see that price was moving in that upwards direction in through there. Bit of a trend line. Price was bouncing in between, up, down, up, down, up. Bang, nice long pin bar there. Down, up, and then look at that level of resistance. Tests it. Are we coming to exhaustion? Is price starting to slow down? Break of the trend line. Look at that big green, big red candle. So there's that level of resistance. There's that big move. Broke through the trend line. Come back up to test. Bit going on. The Aussie against the US, or the US dollar in general. Let's have a look back in time. Okay, so this is quite good. Trend line. You know, we can see prices moving in that direction. We can also see price has been bouncing. Pin bar down the bottom. Look at that pin bar down here. Pin bar down the bottom. Bang. Moves up in between. Moves up in between. Yep. Bouncing in between. Bouncing in between. And then we get to the top. Indecisiveness. How do I know? One, for starters, look at how many times it's hitting that level. 1, 2, 3, 4. Multiple candles are touching that. Look at the size of the candles across the board. They're all very similar. Red, green, red, green, red, green. Turning point might be a major level of resistance. Look at the breakthrough. That was the previous low there. Price shot up. Bang, low. Over here, after the breakout, slightly lower than it, maybe on par, but it pulled back up and then continued. You can see. So we want to be able to identify these swing high, swing low moments as well, because, and you'll pick them on your daily. So if you go to the daily time frame, for example, right, you'll go to the daily time frame, and you should know by looking where the swing high and where the swing low is. Let's have a look at this section over here, for example. Swing low, down in through there. Swing high. About there. So you can see where it's swinging. Swing. Swing. Doesn't quite come back up. Swing. Swings. Swing. Swings from there. Bit of a false break, but swings. What happens at those areas? I mean, we can see over here, for example, this is a classic V pattern. Bang, bang. Look at that. False break out of that area. Over here we can see a pin bar followed by an inside bar, another inside bar. Bang, breaks through. Down the bottom, massive pin bar. Down the bottom, pin bar there as well. Over the top here, you can see a pin bar, can see a couple of, or a few candles in through there, which are all really rejecting that area. Green, red, green, red, green, red. Indecisiveness. So highlighting these highs and lows, the actual swing points, will help you when it comes to knowing whether there could be some exhaustion from on the lower time frames when you start to go down to those lower time frames, and you're looking at trades, you're reaching that level of support or that level of resistance, that major swing point, and then you can start to look at the candles and put all the pieces of the puzzle together. What do the candles look like? If price breaks through it, wait for confirmation. Is price going to continue? Am I seeing pin bars, engulfing bars? Am I seeing tweezer tops, tweezer bottoms? Am I seeing so many candles that look the same in terms of volume? Am I seeing a lot of wicks on either side? A lot of uncertainty in price and indecisiveness. Let's go and have a look at identifying exhaustion. How do we identify exhaustion? What do we think?
Candles are getting smaller as they reach the top or the low point, the swing high or the swing low.
Yep. So candles could be reducing size, volume.
Reducing body size, yeah.
Size, yep. So you might see that. So you see a series of candles moving upwards or downwards, depending on which way we're looking. And as it starts to reach the top, we start to see smaller candles forming, smaller bodies. Yep. Let's have a look. Exhaustion happens when a trend loses momentum and shows signs that buyers or sellers are running out of strength. It often appears just before a reversal or a deep pullback, making it a key clue for spotting turning points. So if you're in a trending environment, there's going to be a few things that you need to look for that are going to help you identify, is price going to turn? Because this is one of the key things I think a lot of us are confused about, and that, we think price will continue. Keyword think. We don't need to think, we just need to see. Let's have a look. Number one, long wicks against the trend. So this is a ways for you to identify, is price going to slow down when it gets to that level? Or are these things happening at this level? If they are, then okay, we're experiencing some exhaustion here. Things are starting to slow down. Momentum is dying. We obviously have the moving averages that help us, right? Because the moving averages will converge. They'll get tighter. But remember, they're lagging indicators. They're telling us what's happening over 10, 20, 40 candles ago. What's happening now? Long wicks against the trend. nice long wicks, pin bars, even bodies, and you see just long wicks. Even if you've got bodies, and even if they're decent sized bodies, but there's long wicks on them against the trend. And I mean, for example, if we're moving in an upwards direction, prices moving up, 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 and then you see a level of resistance. Well, actually, we don't even know that there's a level of resistance. Let's just say that we're unaware that there's a level of resistance. Prices moving up, 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 and then all of a sudden we start to see candles and long wicks, long wicks, long wicks. As we start to see long wicks on the top side, we know that there's pressure, not just on one candle or one moment. It's happening on multiple candles. Small bodied candles after strong momentum. What you were saying, Glenn, the small bodies. So that's a massive indication. So if you see big candles or movement in any one direction and things start to become smaller and smaller and smaller, guess what? Momentum is dying. People aren't doing the same thing as they were, as often as they were. Repeated failure to break new highs or lows. So you might see price moving up, dropping, moves up, drops, and then goes like this. And it's not really breaking any new highs. So we're starting to see price stall at where that previous high was. Decreasing volume as price continues in the trend direction. So even if it's moving in the direction of the trend, even if we see it moving, we haven't reached the level of support, we haven't reached the level of resistance. As the candles start to decrease in size, because you don't necessarily need to go, all right, bang, hit, level of resistance, and then small bodied candles. It doesn't work like that. You might get it halfway up. You might start seeing you have a level of resistance, you have a level of support, prices moving up, and then you might find that as it's moving in through here, you start to get small bodies, small bodies, small bodies, small bodies. Now, we haven't reached the major level. This could be a psychological level. There could be something in through here. We don't know. But you're starting to see smaller bodies. That could be another sign of exhaustion, the volume decrease. Failed breakouts, followed by immediate rejections. Multiple rejections at the same price level show sellers and buyers are defending that zone. Sometimes, a lot of these things, we just look past them and we don't really take them into consideration. But if price is rejecting a level many times, well, all of a sudden we've started to see players from the opposite team jump in. And it's giving us a bit of a clue, right? Momentum's dying. The only thing that's going to help me know if it's going to continue is seeing from a structural point of view, the candles, the way they're forming, pin bars, engulfing bars, mother bars, inside bars, the wedges, am I seeing trend lines, from a structural point of view. Sharp spike, followed by immediate retracement, leaving a large wick or reversal bar. These are some of the main things that we need to take into consideration when we're looking at, okay, is price stalling? Is there a potential for price to turn? Rather than sit back and say, do you think this is going to happen? Asking the community, hey guys, this is happening here. What do you think? Stop and look at it. Okay, do I have long wicks up against the level of rejection, support or resistance? Are the bodies of the candles looking smaller? Are we failing to break those higher lows or higher highs? Decreasing volume, failed breakouts. Am I seeing false breaks of that area and price dropping back in? Multiple rejections of that area. On top
What
of
do you
that,
mean by a reversal bar?
a reversal bar is exactly like what you've seen with the tweezer tops. Bang,
Okay.
bang. Yeah, the reversal bar. Doesn't necessarily have to be a tweezer top or tweezer bottom, but you see a candle of the same size or a bit bigger, that's a reversal bar. So all of these things are going to give you an indication. The moving averages will start to crisscross. Levels of support, resistance, major, and also those psychological levels. Look at all of those and all that's forming around those levels. There's a lot to take on, isn't there? We thought we knew it until we jumped onto this 3-day course, and now we know that, holy crap, I was probably doing a million things incorrectly. But I'll tell you what, at least you are where you are, and these things are helping now with your assessments, or will help with your assessment. Let's take a look at wicks plus support resistance plus candle closes. Watch it as many times as you need to. You know, it's definitely going to help you with, I guess, the fine-tuning side of things. All right, when analyzing price action, the interaction between wicks, support resistance zones, and how candles close will provide critical clues about market strength, exhaustion, and potential reversals. All right, so we need to understand the wicks. We need to understand how the candle closes, because this is something that a lot of us, I think, struggle with. A lot of us just look for wedge, breakout, retracement, slap the Fibonacci on, good to go. Let's try and make some money. But we're never certain as to, you know, is price to turning? You know, what do the candles mean when they close? Where do they close? What do the wicks mean when they close, or if they break through? How do we use them all together? A long wick into resistance, followed by a candle close below it, will signal selling pressure and a likely reversal. So we've got resistance here. We've got a long wick into resistance. So we've got a candle. Price is moving up, 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 up. Then we've got a candle. And then we've got a long wick into resistance. Followed by a candle close below it. Signals selling pressure and likely reversal. So if you see, and it could be a big candle too, it could come up, go, can move, 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 and you could get, you know, a decent body in through here. Actually, let me remove that. Again. Price moves up, 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 up. You have a candle, hasn't quite touched yet the level of resistance, but you got a nice long wick in here. And then followed by a candle that closes beneath it or below it. That will signal selling pressure and a likely reversal. So when you see these combinations like this, keep in mind, okay, price could be turning. Obviously, it would be nice to see, and if we got it, a nice long pin bar, because that's going to give us the added confluence, right? But you still might get a big body with a long wick on it, which it's not really a pin bar, you know. And then a candle that closes below it after it's breached or broken through that resistance zone. If it's closed beneath it, then that might be signaling turning reversal. A wick that taps into support. So let's draw it as we say it. We've got a level of support. So a wick that taps into support followed by a strong bullish close. So once again, price is dropping, dropping, dropping. We've got a candle and bang, wick touches that support. Then we have a strong bullish close. So a candle closes above. That will there signal some buying strength and a potential bounce off that level of support. Everyone with me? We're all good? Yep. You know, it's funny because you now see these. Um, yeah, that could be. Yeah, it could be. Yes, it's the 3 bar reversal. Yeah, you see a lot of those. You see a lot of those, but don't and don't, the way I'm going to explain it to you is this: don't necessarily look for 3 bars because you might get a bar like this, and you might get another bar like this, and then a long wick there, and then a close, right? The one I think you're talking about, Glenn, would be candle like this with a bit of a wick, and then another candle, and then a longer wick here, and then another candle like that. That's what you're probably looking at, something similar to that, which is, which is a reversal, yes, but really, you don't need that for that candle there doesn't really need to doesn't I mean, it's not going to give us context on yes that's a reversal. What will give us more is the wick breaching or touching the level of support and then seeing a big stronger close after it. But what I was going to say, it's pretty funny because a lot of us don't realize how just looking at these individual candles like that really break it down for us. Do you guys see how it makes a bit of a difference with assessing? Does it give you a bit of an insight into maybe where you've gone wrong, or maybe even where things like this have occurred, and you go, you know what, if I knew that before, I would have been able to save myself. Can you see a difference with yeah?
I've seen that. I've seen like 10 trades in the last 2 months, mate, where stuff like this has happened.
Yeah,
Yeah, quite easily. One last night.
yeah. So yes, yeah. So now seeing these things will alert you to them, and as much as they are just basic single candles, or maybe even combination of 2 or 3 candles, um, they really tell a story. Yeah. Yeah, and 100%. I like that you've said that, Michael, because the emotion comes from not knowing, and I think we're never going to know where the market's going to go, but we can make a very informed decision and an educational decision based on what we see with these little market structure patterns that form, and it will help us build more confidence. And I think when we build more confidence, we will stop using the emotions. You can't control where the market goes, right? But you can definitely know that you're reading the market the way it's supposed to be read, and then hey, fingers crossed, the forex gods actually just deliver it the way we want it to.
As you've said before, Andrew, I think, you've said what you've taken on is you're looking to why you shouldn't take the trade rather
Yep,
than why we should be taking these trades. That there looks good. Why, they've got to be really good now to take them.
yep, yeah, and that's one of the first things I will ever say to anyone is it's not about making money, or it's not about how much you make. It's about not losing. And then when you think about it like that, it's about then working out, how do I get in and leave and get out of this trade unscathed? What are the reasons that are preventing me, or what should I be looking at on the chart that should stop me from taking that trade? So it all falls into one, right? And if you look for the reasons to take the trade, great, but then go back over it and have a look at the reasons why you shouldn't take the trade, and you'll start to see things popping up here and then. You'll go, okay, that's why I shouldn't, that's why I shouldn't, that's why I shouldn't. And you'll start to see that little things like this will pop out, and they'll give you that indication of, okay, sit back.
Yeah. So I think, the flip side of that too is once you can get your head around taking it that way, the the byproduct of learning to do that is actually winning trades, is actually account growing
Yep.
without you don't even need to worry about the money side of things. It will just happen automatically.
Yep, yep, and that's what I explain to people is, if you look at it from that perspective, you 100% are doing the right thing. If you're doing the right thing, then what are you rewarded with?
Yeah.
Yeah, 100%. So get yourselves out of that mindset of trying to find trades that are going to give you profits. More or less, what I want you to do is focus on looking for the reasons to take it, but then reasons why you shouldn't be taking it, and then use all of the stuff that you've been learning here over these days to kind of help you make that decision. Should I take it? Should I not? And more times than one, or you'll see that you'll find the majority of the time you're not taking a trade. You'll find that. But then when you do take a trade, it's going to be so refined to the point where everything ticks boxes. You'll go, yeah, there's only one thing that can go against me, and that's the markets. So yeah, if price closes above a resistance level, it shows acceptance, indicating a breakout might be valid. All right. So if price closes above a resistance level, it shows acceptance, indicating a breakout might be valid. But we already know that, and that's why I highlight the word, or not highlight, but say might be valid, because we still need to work out whether it's a fake out or not. And then we've got reasons, or we've got points on how we identify if it's a fake out or not, right? Wait for confirmation, have a look at the actual size of the body itself, the breakout. Have a look at is it a major level of support resistance that it's broken out from? Have a look at has it broken out from consolidation moving sideways, or has it been in a trending environment? Trending environment's going to be a lot better than something that's been moving sideways for a while.
I think the issue with that statement is it depends on what time frame you're looking at. So you could see an hourly candle close above a level of resistance and think, there you go, the next candle is the one I need to watch. But then you could look at it on a 4-hourly and it hasn't closed yet. And then you can look at it on a daily and it hasn't closed yet, but it'll go up and then come back. And then in the end, you'll look at the daily and you're like, well, now it's a pin bar. It didn't even close above, and I've basically just jumped in and then lost it.
But that's why you should be looking at those levels from the higher time frames, because if you've identified that level already as a major level of support or resistance on a daily, you're going to go on a lower time frame and try and take something. There might be a bit of a gap. Yes, there might be, because the daily might have, a 50 pip gap, but then you go down to the lower time frame and that 50 pips is a lot, right? But then you've also got to think about structurally what you're looking at as well. Is it running out of steam as it's coming towards that level of resistance on the higher time frames? What's it doing as you go down to the lower time frames? What do the candles look like they're doing? So it's going to be a combination of both, and I understand that, and it can somewhat become confusing. But if you're nearing a major level of support or resistance, why would you be wanting to take a trade anyway?
I think it's just determining whether it's broken it or not. Like, I know Loms is big on pushing in his sessions that wait for the daily to close above it, and then we class that as broken.
Yeah.
But yeah, I guess people like me jump in too early.
Everyone jumps in too early.
I'll see
Yeah.
2 hourly candles that have closed above a level, and I'm like, it's there, it's broken, and then you jump in and it shoots back down. You're not with a daily candle with a long wick, and you're like, for God's sake.
So this is where you flick back to the daily and have a look. We know it hasn't closed, but have a look at previous candles at that level. What's happened? Has there been a rejection there before? Get those clues and those hints from the higher time frame. What has formed at that level before? If we go down to the 4-hour, have a look at the candle structure. It'll help you gauge. But then also on the lower time frames, having a look at what the candles look like. Are they running out of steam? Is there long wicks against the trend or the direction? If you start to see long wicks pointing up, and you're looking to buy, could be starting to signal that price is slowing down. You pick it before it gets there.
Do you think that with the volatility that we're seeing at the moment, mainly since Trump's gotten in, but the longer term stuff that I guess that you preach quite a bit, like the daily, 4-hourly, and hourly, is still the better way to trade than, say, the scalping strategies where you're shorter term?
I've always been a fan of the 4-hour, 1-hour approach. I feel like it's not too long term, and it's enough for us to handle the volatility. But I do think in times like this, there's a lot of unexpected movement in the markets, and I think on the lower time frames, if you don't know that there is potential for that volatility, then you might get stopped out quite quickly. So I like markets, and it's probably sad to say, but I like it when there's uncertainty, turmoil, and war, because there are people that suffer, which is not so great, but there are people that win in times of trouble and trauma, and it gives us a clear indication of where price is heading when we get things like war and whatnot. But it does have an impact on those lower time frames because there is some spikes in volatility, and it can become quite difficult. All right, if the candle closes back inside the range after a wick pierces the level, it often signals a fake out. Right, so we know what a fake out is, obviously price, bang, like what we saw, or we kind of try to see with the euro yen, but price shooting out and then all of a sudden it drops, and let's say price is shooting up, and then shoots up, bang, and then creates a long wick and then closes back within. If the candle closes within that range, back inside that range, then obviously that's a fake out, right? Multiple wicks plus flat candle closes at a level often indicates indecision. Wait for a strong close to confirm. Multiple wicks plus flat candle closes. Yep, those candles that just have no wick on them. That also indicates. So these are the things that we want to be looking for. Little tip for you. Always evaluate location, support and resistance, wick behavior, and how the candle closes in context. One without any of the others will give false impression, but when you've combined them, they will give you or tell you a powerful story about price intention and strength. All right, so use them in conjunction. Right, support resistance levels, wicks, how the candles close, the body sizes, have they breached the levels of support resistance, have they closed beneath them? We're going to teach you to become the best mechanic, Artie. It's the truth though. The more mechanical your trading plan is, the better. Yeah, you really need to be focused on those small nuts and bolts. What do we know about reversal zones? Reversal zones. Do we know much about reversal zones? You know what? They're pretty much the same thing, really, as what we've been talking about. But we just want to understand they're key areas on the chart where price is more likely to change direction. So when I draw my levels of support and resistance, I've got zones. Uptrend or downtrend, vice versa. These zones are often found at major levels, supply and demand zones, psychological levels, fib retracement areas. They're areas where trades expect a shift in momentum due to previous strong reactions to market or market imbalance. So once again, zones, those areas that we draw, don't draw any one single line. We need to highlight and identify zones. All right. Common reversal zones, major support and resistance levels. We know that high time frames, don't draw one line. Make sure you've got a zone there. Make sure you've got an area there. Fibonacci retracement levels, mainly the 61.8. 78.6, it does occur, but I don't use it. I remove it from my fib tool. I like to keep it clean. The most highlighted and most common and the strongest level would be the 61.8. Previous swing high or lows or structure breakpoints. So where price is swinging from. Psychological price levels. 1.000, 0.7, 000, those round numbers, right? Those psychological levels, those round numbers, that's where you'll find price reverse. Supply and demand zones, very similar to those areas that we were talking about before. We'll go back, we're writing some stuff. All right, reversal clues to look for. Exhaustion candles, we know that, pin bars, dojis, small bodies with long wicks. Look for all of these. when you're looking at is price slowing down. Pin bars, dojis, small bodies, long wicks. Pin bar, small body candles, dojis, anything with long wicks. Engulfing patterns at the edge of a range or trend. Do we see an engulfing bar at the highest point? Do we see an engulfing bar at the lowest point? Volume drops or spikes near the zone. That'll show fading or aggressive interest, depending. As soon as you get near that zone, if you start to see volume spikes or volume drops, that could potentially be fading interest or aggressive interest. Failure to break a key level after multiple attempts. A break of market structure, so lower highs after an uptrend or higher lows after a downtrend. Just like that. Multiple confluences, resistance, Fibonacci, engulfing candles. If you can get more than one together and they all line up, then you're going to get confluence. And when you have multiple things saying the same thing, then you're going to build a more stronger story in terms of what's going to happen. Okay. There's a little tip. Not every reversal zone results in a reversal. So we need to keep that in mind too. Look for price action confirmation and avoid rushing entries. Something breaks out or something moves through an area, wait for it. The best setups show a combination of technical clues and structure alignment. I know it's hard for you guys that are on the lower time frames because when candles break out through levels of support or resistance, you're taking them straight away. I think it's like what you were saying. Where'd you go? Am I gone? Graham, I think. Oh no, yep. You take them on those lower time frames, and all of a sudden, you know, it turns around and moves in the opposite direction. So it might make it difficult for you guys on those lower time frames. If it doesn't, and you know, it moves in the direction, fantastic. But make sure you have looked at the candlesticks, understood technically what's going on, structure, all those little things that we've been learning.